So Crocs is doing really well this morning. What's the issue? So I've done a couple of other videos on Crocs, and I think I mentioned that this PE is misleading because Crocs had to take a write-down on their acquisition of Hey Dude, but the write-down is non-cash, so it does affect what you report as earnings, but it doesn't affect the amount of cash coming in because it's a non-cash write-down. So Crocs is trading at a very cheap 6 times free cash flow. And part of the reason that it's so cheap was that it was affected by tariffs. And every time the tariff talk with China turned negative, the stock got beaten up more. And today there's news that the current administration is trying to work out a deal with China. So that's why this is up a lot today. So I have a mid-sized position in this. I've also sold some puts and used that money to buy some calls. And I have some puts expiring on the 31st, which is Halloween. It's also right after earnings. And I sold puts at $80 and I got a $4 premium for each put. So I sold 2 of them. So I'll get $800 if this trades above $80 by Friday. Sorry, not by Friday, by Halloween. They expire on the 31st. Yeah, that's Friday. And if this expires below $80, I will have to buy the shares, but let's say that it expired at $80 on the dot. I have sold 2 puts, so I would be required to purchase 200 shares, which would be $16,000. But with the puts I sold, I received $400 for each put. So as long as this does not trade below $76, even those shares that I was forced to buy, I'll still be making money on. And as I said, if on the 31st, when the market closes, it trades above $80, then I won't have to buy the shares at $80, and I will keep the premium that I sold on each of those, which was $4 each times 100 shares. That's 400. I sold 2 of them, so that's 800. And I sold them last week, so that's not bad work for betting that this would stay above $80 for 2 weeks. And on a lot of these very volatile things around earnings time, you can get a lot of premium. It's a risky strategy, so I don't mind using it for stocks that I would like to own. So I already have a mid-sized position in Crocs, and my average price on that is about $82. So if I got assigned those puts and my break even on those is $76, that's great for me, because if I liked it at $82 on average, why wouldn't I like it at $76? However, if there's a stock that's just volatile and I don't want to own it, and you can get a lot for the premium because it's so volatile, that's not something that I would use this strategy for. Again, this isn't a recommendation to buy or sell any stock or to use any strategy. This is just me working through my process. But Crocs is one that's talked about a lot, and people either love it or hate it. And people have very strong opinions on it. So let me know what you think in the comments. Do you own Crocs or not? How do you feel about it? Do you trade it with just the common shares, or do you use options? And like and subscribe so you'll see future videos like this. And if you want to support the channel, there's a Buy Me a Coffee link in the comments, and you can sign up for Robinhood with my link, and then you will get a discount and I will get a commission. Have a great day, everyone.